is up? I did a live recording of the session today. It is December 5th, 2025. We're just in the beginning of first week of December price action. So I recorded the setup today. And this thing right here is a pre-market trade. I paper traded it. I did not take it on any account. It played out big. It was a mech model, and I'll go over that. And then I ended up getting off the market after this big move up. When we really get a beautiful mech model, it would have been intuition for me. I would have had to known, but now I do know it, and that's why I'm making this recap to journal it. Because I would have not have thought of this to be like an A+ mech model, but I'm going to give a reasoning why from what I've learned. So, coming into the day, we had on the 1 hour on NASDAQ and ES, we were sweeping out highs. We swept out highs up until this point. So we were delivering from buy-side liquidity, right? And on this move, no, I had to rethink. ES was the same thing, by the way. We're looking at the 4 hour on ES. Coming into today, this is where we were sitting on the 4 hour candle. We were just sitting on this close. We were waiting on this one to close. The 1 hour, like I said, we were sweeping buy-side liquidity coming into it. And I was on at 7:30. I was just marking shit up around there. So we're delivering from buy-side, and if we go in the higher time frames, we have a 4 hour. That, like I said, this was before this candle filled into it. We had the 4 hour for value gap. On here we had 1 hour for value gap resting between here, another 1 hour resting between here, and we had this 4 hour. Now the 4 hour coming into the day got respected, so that's another thing why I wasn't really thinking of shorts off of this, but the mech model presented itself. I'm assuming it'll want to go higher because we have a daily resting above, and I'm going to get into that. But we had this 4 hour too that I wanted to see get filled, so I thought we were delivering from. Remember, why does the market move? To rebalance inefficiencies, seek draws and liquidity, and to rebalance equilibrium. I thought we were delivering from buy-side liquidity to then go deliver and rebalance equilibrium, either to go higher for that daily or, but we pushed lower. So I'm just getting into that. That was the perspective. That was the thought process. I thought we were going to deliver into this 4 hour, 1 hour, all these fair value gaps, rebalance for inefficiencies in the higher time frame, right? To then go what? Deliver buy-side is what I was assuming for the day. I wasn't thinking shorts. What do I see us come and do? Now, like I said, that was before market open. This was around 7:30 to 7:50. Price starts pushing lower, right around this 7 o'clock range. Starts pushing lower. We sweep out Asian session lows, which I will show on here. We had Asian session lows. We sweeped out those Asia session lows. So we're delivering from sell side now, but we're continuing lower to now go tap into a 1 hour. No, I think it was we had a 30-minute fair value gap, a 15-minute fair value gap, and a 5-minute fair value gap, all which got respected. No 1 hour. And off of that respection, you would be looking for what? For the mech model, because this would be the mech model. We are sponsored by a high time frame key level, sweeping significant draws and liquidity, which are sell side. And like I said, we're not trying to predict the whole move, but a 1-to-1, 1-to-2 to target into what potentially? This 5-minute fair value gap, right? But what do we get? And this is why this looked like a good trade, but in hindsight, it's not great. The setup is mainly there. This is why you don't pattern trade the stuff. The setup's mainly there, but what are we coming into? I think we entered off of the highest time frame inversion, I think would have been the 3-minute, and it closed up here. But when we got in that, we're already targeting into a 5-minute that we could respect, right? And even then, we have another 5-minute, which is right here, where if we targeted into this 5-minute, let me move this lower. If we targeted into the second 5-minute, that would have been a negative RR. We go break even there. I mean, you can do that. You 100% can do that. And it would have worked out for you. But it's also questionable of should we be taking that? Because you have to ask yourself, do I want to go break even that quick? Or do I want to wait till another draw on liquidity to target? Maybe you target the second 5-minute fair value gap and still negative RR, or you could have gone on to like the 15-minute and pulled up your equilibrium, you could have maybe taken profit at equilibrium, which is a negative RR. I think 30, there was no 30 minute. I think it would just be 15 minute. Yeah, 15 minute. I mean, it was a tough trade, and I mean, definitely if you're going to take this, if you were to take this for the future, if I were to take this and it was like after market opened, I'd have to have higher context to go higher, which I mean I did. Like I said, I thought we wanted to go into these 1 hours and 4 hours. We inversed the 1 hours, by the way, coming into the day after 9 a.m. candle closed, but the 4 hour got respected, so we delivered higher. But I mean, my higher time frame context too was I thought our drawn liquidity would have been higher now, or to at least I assume so because of the higher time frame. I wanted to see a fill into, let's not go to the daily, but fill into these 1 hours, 4 hours, respect them to go up to daily, which we get close to, but we didn't tap that daily. And then, like I said, this was pre-market, so I didn't take this, but if this happened at market open, this is why I'm reading this up. So I think if I were to take this either way, just to play it safe, to lower my probability of losing, also lower it of winning potentially, I would, as soon as we hit that 5 minute, either not take the trade or stop to go break even right away. And in this case, it would have worked out for you. You would have put on that break even. You can see where that wick right there ends. You see where the wick ends? You know, I wonder if I should make my wicks darker actually. They are as dark as it gets. Oh, no, they're good. But I go break even very quick. And it would have worked out in this case, right? We can go on to the next trade. This is the one I'm going to journal because this happened after market open. So this is an actual, like, quality setup that market gave. So what do we see? After we pushed lower and swept out that sell side in the HO session, we're delivering from buy side. We're delivering, from sell side liquidity. We are delivering from it. By the way, you can look at what this trade ran for. Even if you took it all the way to these draws or this draw up here, it's a 3RR, could have targeted here, you know. But like I said, that's pre-market. So we inverse those 1 hours. So I don't still have those marked up. I don't have them marked up on ES, but we inverse those 1 hours. We respected the 4 hour at 9 a.m. once the candle closed. We had news today at 9. 53.3%. Forecast was 52. So actual greater than forecast is good for currency. So that's what we get. News comes out at 9 a.m. Candle closes, which was right around here. We're expecting that 4 hour. What do we see then from there? Well, we're assuming, hey, if we're ripping this high, the drawn liquidity is probably going to be really the daily. And we're pushing higher. Now we've swept that buy side liquidity, right? I'm going to get rid of this fair value gap. And we're going to keep the 15-minute ones. We inverse these 15-minute fair value gaps, which I would say is confirming bullish order flow. Like, we already inverse on the 5 minutes, right? But this 15-minute guy inverse as well, so that's nice to see. We can get rid of those. We're clearly seeing bullish structure. We come out, sweep this buy side liquidity, and we're then trending what? To these 1 hour buy side liquidity draws. Up over here, right? So you can see it better. There you go. I'm gonna move this over like this so we can get a little bigger. So we sweep the buy side liquidity. Like I said, we're getting like 5-minute inverses well, and those 15-minute inverses too. We end up pushing higher. We sweep that buy side liquidity. What do? We come back down into this 5-minute. I don't know if it was a 15-minute. No 15-minute. We come back down, fill in on this 5-minute. Now, this is before news came out. News came out right on this candle. But when we filled in this 5-minute, what you could have went and looked for. Here, I'll mark it up actually. Okay. I mean a goofball. We had a 5-minute right here, which we'll mark up. This is something you also could have taken. You see, we come into that 5-minute. Remember, we filled it, right? What could you have taken off of that? inverse fair value gap, which I believe we get. Okay. Dude, I'm tweaking. Oh, I'm working up the wrong 5 minute, bro. Fuck me. Slowest trader ever. So we come into that 5 minute, right? I marked it up as a 3 minute, but it's a 5 minute. Oh my god, bro. We come into this 5 minute after we've inversed all those gaps, clearly showing bull structure. We're looking for the highest time frame inversion, which I believe was a 3 minute. Maybe I believe it was actually a 4 minute. You take that 3 minute inversion. Even there it isn't great because you're coming right in. This is after. I'm tweaking. Either way, this is after that. You take that 3 minute inversion. You have huge stops though. What the fuck was that? Huge stops. That's something you could have taken. I believe there was a better setup out of this. Oh no, that runs for a 1-to-1, but you would have gone cooked because of an SMT, which we're going to get into. All right, let's get into the actual like quality trade. So we swept up buy side liquidity. We swept higher. We swept out buy side liquidity up here. Nice. That's what I wanted to do. I'm starting to miss MacBook. I'm being a dip. We sweep out the buy side liquidity. Okay, we're good. And what I'm wanting to see after we sweep out those 1 hour highs is us to be sponsored by a PD array, fair value gap order block. So I look on the 30 minute, we have nothing on the 30 minute to respect, nothing on the 1 hour, 4 hour, 15 minute, like nothing on those time frames. And those are the time frames we look for to be sponsored by, like a fair value gap. For me personally, I like the fair value gaps to be my sponsors. We see nothing. So I'm like, fuck. Well, look, you could get an inverse because if you go on the 5 minute, we start kind of consolidating or accumulating. And I thought maybe we could get like accumulation because we didn't have the daily, but I didn't see the SMT by the way because I had ES on a higher time frame. But if we go to ES at this point, what does ES have? Which I'll show you right at this. A high, a higher high, a high, a lower high. We make a lower, an SMT. NASDAQ makes a lower high. And I didn't see that. I wasn't looking at ES on that time frame. And by the way, I wasn't really even looking at the market at this point. I was 9:30, 9:35. I was like, it's getting later in the day. It wasn't too late, but I'm like, it's getting later in the day. I'm off in 20 minutes probably. I don't see the SMT, which is also, like I said, SMTs alone aren't great, but when they can help with your play, I mean, they're a little bit better. When they have something added to them, like an SMT alone. You want to see maybe a liquidity sweep and then an SMT and then a breaker structure. So this is honestly like A++. Now the reason I faded is because, like I said, I didn't see the SMT and I didn't see we were sponsored by anything. Now we did get an SMT on the 5 minute, but we were not sponsored. But why might you still take this? And when I say this becomes like just market experience and learning things, normally you would want yes to be sponsored. Normally for the MEC model, you want there to be a fair value gap, right? To sponsor us on the 15-minute time frame or higher. 15 minute, 1 hour, 4 hour, 30 minute. We want like a higher time frame fair value gap tied in with a significant draw on liquidity. Now we don't get that, but something that I've noticed and I learned today is we are so overextended. I mean, if you like obviously if you don't like that idea, don't take it. If you can't really see if we're overextended, but I mean you can tell we were overextended today. Huge rips down. We're ripping higher. I mean. Not only that, look at the higher time frame. We've just been pushing bullish. And yeah, you could say, and like it's hard because we had the daily right above. So you would think, even when we have this consolidation at SMT, I don't think it's going to go lower, right? I don't think it's going to go that much lower. And I think it's going to maybe fill to go higher. But this trade ripped lower. You're going to see played out for a great RR5. But we're just going to mark it to where I would have gone out. So the only reason you should have taken this, and this is why I looked into this, and I'm going to state this and how I read it. So, yeah, so I was thinking that price was going to give us a rebalance into like a 15 minute. So, We had a 15-minute right here to go higher. That's what I thought. I thought price was going to go and just fill in imbalances to then go higher to tap into that daily, because I'm like, no, wait, we have to go to that daily. Yeah, we swept liquidity, but there was no sponsor either. I don't think we were able to get strong rejection off of this. Like I said, I know there was an S&T, but I didn't think we were able to get strong rejection to off this point to just go lower. I was like, we'll probably just fill in imbalances to then go higher into this daily for value gap in this area, right? But, and so that was just my thought process. And I figured out we don't need the key level, that fair value gap, right? Because of how overextended price is. You can just see how before market open we dipped down. Now we've just been ripping up higher and higher. We're so overextended. So it basically, you don't need the key level because of how overextended price is, and the sweep of buy side liquidity was internal, and the S&T. We had a sweep of buy side liquidity that was internal, and we had an S&T. And we were overextended. It comes down to that was kind of a discretional trade, but it was still good. Now, what else did they enter off of? You could have gotten off of the highest time frame inversion, which it would have been what? I'll mark this up so you can see. There we go. 1 minute inversion. Highest time frame fair value gap at the time. And where would we be targeting? Well, for the MEC model, usually, like I said, high time frame key level, but this was more discretional, and this is why we're going to journal it. Could have targeted. Yes, we had a 5 minute right here, which we were playing into. Which, like I said, you could have maybe gone break even. I'll even mark this up just for the sake of it. We had a 5 minute right here, which we already tapped into. The 1 minute inversion is showing displacement inside of that 5 minute, right? I think this happened, 2 minutes before the 5 minute candle closed, but yeah, it is 2 minutes before, because it closed inside of it, and then it actually displaced lower. You could have taken this, and honestly, we're playing into 5 minutes. Like I said, it's discretional, but we are very overextended, and we do have the S&T, which means what? Even if you don't think the S&T is going to rip lower, like this far low, you could assume that the S&T is like, hey, with this S&T and the inversion, you know what we're probably going to see? And was there a 1 minute break of structure on top of that? Basically right after our entry. The S&T, sorry, I had to think. That S&T and the inversion is still telling you that, yeah, we're not going to push that much lower, but hey, we're probably going to want to fill deeper into this fair value gap. I don't think you give the S&T an inversion just to tap the fair value gap again and then bounce off. I think it would actually show a little bit better of a move and deeper fill, at least. So you could have targeted that. We were also in a 15-minute fair value gap, so you could have gone break even a little, like in the middle of that range, right? And then your second take profit, you, like I said, at this point, once you hit this fair value gap, you can go break even, right? Does it come back to your stop loss? It does. It comes back to your break even after you get in on that. Or, yeah, it does. You could have just held it. Like I said, it's discretional. I know PB Blake, he took this trade. This is why I had to go look at it. Yeah, overall, wow. Right off that 1 minute inversion too. I think he actually targeted the 1 minute low inside of this, inside of the second 5 minute, basically, or right out down of it. Yeah. Which, like I said, we were very overextended. It was a discretional trade, and that's why I'm journaling it, so we can go back on it. Sorry for my explanation. That's freaking... I'm getting terrible sleep the last couple of days. Absolutely terrible. Yeah. I could have got out here, and that would have been a 1-to-1 on the Top Step account, which sucks, because I could have ended the week, just with 2 consistent trades, 2 winners. I like that, just for my journal, because ideally, like I said, I'm counting eval trades the same as the express for this journal, but over the next 50 to 100 trades, ideally, I have over a 60 to 70% win rate. Like with a 1-to-1, 1-to-2 is going to be my targets. Like that's what I want my ideal risk to reward to be for the next year, maybe year and a half, until I can build discretion. But I want my risk reward to be a 1-to-1, 1-to-2. I'll just target those before I start targeting. Because with discretion, you can start targeting draws on liquidity, right? And not really the risk reward. And you can get, it's more discretional trading. You can get in on bigger moves. But to start, you should want to focus on consistency. So I want to target 1-to-1s. 1-to-2s around that range. Maybe 1-to-1.5 is my average, or the median of it. And have ideally over a 55% win rate to 70% win rate. If I could have a over 70% win rate, that would be incredible, and I would be ecstatic. But a 55 to 70% win rate would do me just good enough. Even if it's 55%, I know that, hey, that's better than I've ever done with it, and I can build this more. Like I said, this summer, I said this, I don't remember, I've said it in some of my videos, I have videos on it back in the time. I was on a 50K eval for 3 months, and I was targeting 1-to-1, 1-to-2s, and I had like a right under a 50% win rate. So it's like I was basically break even with it, right? Win money, I lose money, and I was able to pass an account over time. And I was using it wrong. I didn't really understand how much I do now, and even now I'm never satisfied. It's like I need to know more. I need market experience. I need more experience to understand these things. Perfect example of that is like today, and why you should journal, so you can. That's how you grow, and you back test and you forward test. But I had a right around a 50% win rate, so I'm thinking now with a little more experience that I have, and coming in, hopefully quarter 1, quarter 2 price action is hitting for reversals, and it's not like the reversals are going to give me a big move, but they're more higher probability to play out then. It'd be incredible. But with the stuff I'm starting to understand now, and maybe I see this today and I don't take it, but because like I said, it's a little bit discretion, right? That's why you don't pattern trade things, because it's not going to always look the same. It comes down to discretion, and that's how you can still thrive in these markets for prolonged periods of time. But not gambling, obviously, mechanical wise, it needs to be good, and you need to have you need to have discretion as well. But yeah, if I could have in the next 100 to 200 trades, I mean, yeah, that can lead to payouts. I'm not really worried about payouts. I'm mainly worried about consistency. I just want consistency. And if I could be consistent over time, I know that I could, over time, just keep doing what I'm doing, and that will build discretion and market experience, and then I can get a little more confident in my trades, where I can actually target, instead of like a 5-minute for value gap, 15-minute for value gap, I could be like, okay, I just got an entry here. I'm going to target 1-hour lows, right? Or I'm going to target 30-minute imbalances, moves that can run for a 4-RR, 5-RR, 3-RR, bigger, right? But to get to the point, I just need to focus on consistency. So, I mean, we're going to make, I got to remember how to make a new day. Trade. Alright, risk to reward, 1-to-1. Okay. Okay, now that I have it out, actually, I can go to this and go to a gallery. P&L percentage. Oh, we'll just do 1. Can I do 1-RR? No, we'll just do 11. We'll just do 1. Risk to reward, return 1. P&L 0. Win. Loss. Nope. Break even. No. Pair. That'd be NASDAQ. Position. Short. Entry time frame. 1 minute. Bias. Bullish. Bullish coming in today for sure. Day. Today's the 5th. Oh, it'll be Friday. Month. December. News. We did have news today. Confluences. Alright. Gotta lock in. 5-minute SMT. 1 hour buy side sweep. 1 minute inversion. 1 minute inversion. Was there anything else? I don't think so. Okay. count. We'll say forward test. We'll say forward test. Well, actually back test. Learning. So overall, coming into the day, we had a daily Fair Value Gap resting above us, and in pre-market we swept buy-side liquidity, and price started seeking imbalances on the higher time frame, 1 hour, 4 hour, fair value gap. I will just say 1 hour, 4 hour fair value gap. 1 hour, 4 hour fair value gaps below. What am I doing? Once 9 a.m. came around, news came on, which was red folder. So once 9 a.m. news came, once 9 a.m. came around, news came out, which was red folder, and the 1 hour fair value gaps got inverse, but the 4 hour fair value gap got alright, so yeah. And the 1 hour fair value gaps got inverse, but the 4 hour fair value gap got respected because of that huge move up. We then swept more buy-side liquidity. We were overextended bullish on the day. After we swept the buy-side liquidity, wait, is he going to ask me some other things too? I feel like I just fucked this up. Hold on. After we swept the buy-side liquidity, we saw no sponsor from a fair value gap on the 15-minute and above, just a buy-side sweep. We then get a 5-minute SMT bearish with a 1-minute inversion resting below. Oh wait, 1-minute inversion bearish. We have 2 5-minute values below us to target. Overall, I faded the trade because we had no sponsor of fair value gap to help the MEC model but in hindsight, I learned that, oh wait, was no sponsor of fair value to help the MEC model. So yeah, oh my fucking red. So we can just read this. So overall, coming into the day, we had a daily fair value gap resting above us, and in pre-market, we saw buy-side liquidity, and price started seeking imbalances on the higher time frame, which is 1 hour and 4 hour fair value gaps below us. And price then rips buy-side after respecting mid-time frame fair value gaps. Once 9 a.m. came around, news came out, which was red fuller, and the 1 hour fair value gaps got inverse, but the 4 hour fair value gap got respected because of that huge move up. And then we swept more buy-side liquidity. We were overextended, bullish on the day. After we swept the buy-side liquidity, we saw no sponsor from a fair value gap on the 15-minute and above, just a buy-side sweep. And we then get a 5-minute SMT, which was bearish, and a 1-minute inversion, which was bearish. We have a 2 5-minute fair value gaps below us to target. Overall, I faded the trade because we had no sponsor of fair value gap to help the MEC model deliver lower with higher probability. And we had the daily fair value gap still untapped, resting near above. But in hindsight, I learned that when price is that overextended, it doesn't need to tap the daily fair value gap above. And the SMT on the 5-minute tells us no. Gives us some information that price wants to go. Alright. You go into entry. That would have been a market order. Well, I didn't take the trade, so we can just get rid of entry. December 5th, session time. New York AM, motion control. Good. Good. Motions, notes. No. Trade rating. They said it was A, so I'm going to give it fucking a 5. Add a property. Well, now I got to take pictures of it. Where do I add a little more in here? Oh, actually, we can probably go here now. Probably go to table. Oh, does it give me a new page? What if I click the first one? How do I make sure I did another page? Did I just fuck this up? Well, let's go to gallery now because I feel like I just added another one. Maybe we can delete. Delete. Well, we can start with pictures actually first. So let's go into the daily first. Get just a daily photo popped up of what we have. That's the 4 hour, that was that big. We can get rid of the 4 hour. We can just mark up the daily. So we're gonna take a picture of the daily on both of the pairs. ES had nothing on the daily, but it was mainly NASDAQ. Just trying to make it as alright, perfect. Take a picture of that. Download image. That was at noon. Okay, so now we can go into the 4 hour. You can see the 4 hour respecting. We go to the 1 hour. 1 hour is a little messy, but yeah, that works. Oh shit, wrong button. Yeah, it works. Download image. And then we can go into the 30-minute. We got a higher time from SMT too. That's probably why that trade went down lower. Take a picture of this, download image. The 15-minute. I want to mark up the things that we went to go long and mark it up like this actually. Move another 15 right there. Go to 15 over here. You can get rid of some of this buy-side shit now. On top of that. We can take a picture of this, download image, and go into here. Now is when we can go in detail with this. No, that's not what I want to do. Here we go. 5. We had an unfilled 5-minute right here. Beautiful. Beautiful. Any other 5 minutes? Not really. I do have these 15 minutes. I took a picture of the 15-minute, didn't I? If I didn't, that's annoying. And that's fine, we can handle that. Just, I want to make sure I got this all good. Alright, we can keep that there, we can keep that there. Actually, am I able to add text boxes? Oh, that's actually, so we gotta be a little more detailed. I'm gonna do some saucy. Where's shape? Indentation tools. Nope. Okay, nope, it was not no. Anchored text. Daily resting above. Cool, nice. Daily resting above. Well, is there another way I can do, like, what else is there? Anchor text. I never played with this. Price note. Fuck no. Ain't price note. Pin, table, call out, comment. Oh, what the fuck? So we have the daily right there, daily resting above. We can do, let's do that again. We can do unfilled 5-minute rest. Unfilled 5-minute resting below. I can probably draw something actually to that. Well, that's actually, maybe this is fucking terrible, but. Yeah, unfilled 5-minute resting below, unfilled 5-minute resting below. We can take a picture of this actually now. And we can do one more anchor text. Sweep of 1 hour buy-side liquidity. How do I delete that? Well, I think that does it. Seep. Sweep of 1 hour buy-side liquidity. Beautiful. Take a picture of that. Download image. You can get rid of the daily thing. You can get rid of this. You can get rid of this. Oh wait, fuck, put that back. And we're just marking up the inversion then. We got the 1-minute inversion. And we can just do a text of, can I just do text? Let's mark this up. We can do I think this would be internal low. Is there any way I can lower that text, make it smaller? Nope, we need to make it a little bit bigger. Just put it. Beautiful. Mark up ES's where I had the SMT. And that inversion. Beautiful. Take the picture, download image. Now we can put it over in Notion. So I think we did the daily first. We'll start with the daily. And I gotta do all this image shit. Like I said, I honestly feel like this is an incredible journal. Which was the one at 12? That took me 9 minutes to do. Really. I believe that's the daily. Yep. We do the 4 hour. The 4 hour was at 12. That was the second one. Yep. We can do the 1 hour. I passed it. There you go. Yeah, it was the 1 hour. I probably look at up image every time. I don't know what I'm doing. Yeah, open that one up. 15 minute. Yeah, there we go. That's just simpler. We got the 1202. Is it the 5-minute or the 15-minute? 15. We got the 5-minute. The 5-minute, it took me a couple minutes to put some time in. Now when you click on it, on-field 5-minute resting below, beautiful. Beautiful. Wow. What did that trade run for? 1-1? Oh, and that's another thing with this trade. Yeah, that thing, like I said, it ran. Now it's, where's it going? Who knows? You can just go back to here. 5 minutes. So yeah, daily resting above, the daily. We have the sweep of 1 hour buy side. We have a 5-minute SMT. We get a 1-minute inversion targeting unfilled 5 minutes below. And we were overextended. That's something I probably could have put in there. I will put that in there. Actually, we can go escape. We can do 1 minute. Do, 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 do. 1 minute. Beautiful. Notice the over. Replace 2 C's. Thank you. Therefore, comma, yeah. Sponsor. Oh, oh my gosh, bro. It's great. Significant. Significant. Thank you. We're going to keep it the same. Overall, there is everything for that. So we can get out of that. We can go into oh yeah, we would put like average title. Post-market analysis. say date. Here we go. 12, 4, 25. Beautiful. Beautiful. And now we can do the next one, where the date. It should save it, shouldn't it? Hold on. When I go to gallery now, let's redo gallery. No, we're still good. When I go table, what does it do? We're still good. Just gonna keep most of it. So you go back to gallery. You can do the new date, which is 12/05/25. This video is going longer than I wanted to, so I'm gonna do this myself for the rest of the time. Overall, though, I mean, this was, like I said, it was a discretional trade for sure. You need a little bit of market experience. You can't pattern trade it, but this is just an experience and an idea for me to look at and understand. Like, usually, yeah, I mean, you would assume that price would want to manipulate it into that daily, especially when me coming into today, I was bullish and I thought we were going to at least tap into that daily to deliver lower, or come lower to then come tap into that daily. And pre-market gave that move lower, respected a bunch of imbalances, filled in imbalances, then pushed us higher towards that draw on liquidity, which I thought was the daily. So that would have been like ideally some target to go there. It would be more continuation than focus today, so I was very eager and I didn't even take a setup. But then we get a clean reversal because of an SMT on the 5-minute and a 1-minute inversion. Now, not that alone, but we also swept buy-side liquidity, so you have 3 confluences into that. On the 4th confluence, just something that you could notice after seeing price enough, is we were very overextended. And even if price was super overextended and want to just keep extending, I mean, you could say that. Well, what if price wants to keep extending? Yes. Price from here might just want to keep going, pushing higher. But price gave an SMT, which is, hey, telling us, hey, we might want to switch order flow here, which means we might want to go bearish. And an inversion. Not only that, you could say, then that still fits the idea maybe where you might want to push higher, but price might want to rebalance itself, come to this 5-minute, come to this 5-minute, come to this 5-minute, and then go higher, right? Any of these 5 minutes and go higher. Or maybe like a 15-minute down here to go higher, right? So then either way, that's your model. Try to find the risk reward, that 1-to-1. Target the unfilled 5 minutes. That's the model. So we can take that. We can take that. Understanding the context. There doesn't need to be a sponsor in this case because we were overextended. And even with a still bullish narrative, you can catch a small short towards these small 5 minutes all throughout this range. To then maybe we go higher. Or price gives what it did today, a complete switch, and just completely rebalances. More than those 5 minutes, it runs. It runs. All the way to the 15 minutes down to here. All the way to this 15 minute. Not just this 15 minute, which it respected, but it came down to this 15 minute on this candle. Ran for a 5 RR. Now I'm only taking those 1-to-1s, but that's just showing you, like, because I came in and I had this idea that price will, even if you had to see the setup, it's like we have the daily resting above and no sponsor, so it's like it's not that good of a trade. But it's actually it's a quality trade because if price wants to continue higher, then yeah, we'll continue higher. But we're getting an idea we're getting an estimation, a good guess off of this 5-minute SMT that, hey, price might want to go and rebalance. It's probably wanting to push a little lower before it can go higher, and an inversion to help that. So we get that SMT and an inversion off of that to help that. That's even better. Price is probably going to want to fill these 5 minutes. It might want to push lower. Now, it might come to these 5 minutes and go higher, but that's why I'm trying to find my 1-to-1. And if I don't have a 1-to-1 in any of these 5 minutes, hey, maybe stay out. If you don't have a 1-to-1, obviously maybe your draw isn't all the way down here. That's a 2 RR, right? It's not a big move, but that's a quality move. Maybe it's just to here, which is a 1-to-1. Maybe it's to an internal low, like PV Blake targeted, which was just a 1-minute internal low, a 1-to-1 risk to reward. That's what you could have done. And now I'm going to keep this in mind, and that's why I wanted to journal this, so whenever I see this in the future, instead of me just pattern trading, I have experience to be like, well, maybe we're overextended bearish. We have a daily or a 4-hour resting right below us and we're on sell side, so we're ripping sell side, let's say in a couple months or even tomorrow. We're ripping sell side. We are sweeping out sell side liquidity. We've already rebalanced ourselves. We're looking like we want to continue bearish, and we have a daily fair value gap resting below us. But we've been ripping so far sell side. When we get an SMT, a bullish SMT on the 5-minute after sweeping 1-hour sell side, yes, we still haven't tapped that daily fair value gap resting below us, but we tap into this now sell side liquidity. We get a 5-minute bullish SMT. You might think we might want to continue lower for that daily, but if we have unfilled 5 to 15 minutes, you're just looking for the highest time frame inversion on the 1 to 5 minute. You can execute on that, and you execute on that inversion. You target those unfilled 5 to 15 minutes, and it meets my risk reward of 1-to-1, 1-to-2. I'll take it. And if it doesn't right away, but there's a 5 minute internal high or there's an internal high in there, I can go break even quick and just trust that it continues to play out and be comfortable with the break evens. Journal that, understand what I did when I went break even, right? And just letting that go, letting that play. And that's just a good example of a bullish setup with this, you know. And usually, like I said, and I talked about this, I think, in yesterday's video, my ideal model for the MEC model is a sweep of significant drawn liquidity, Asian session lows, London session lows, Asian session highs, London session highs, or session highs and lows, data highs and lows, 1 hour, 4 hour highs and lows. Those are the things I'm like wanting to see get swept, right? I see one of those get swept. I see us also coming into like a 1 hour, a 30-minute, a 15-minute, a 4 hour for value gap. And if I'm seeing those get respected and I have an unfilled 5 to 15-minute resting in the opposite direction and I get an inversion, I'll take that and target 1-to-1s, 1-to-2s. That's my ideal setup. Add in maybe like a 1 minute SMT. Let's say before we get that inversion to push us, let's say we're looking for a short to push us lower, right? Before we get the inversion, after also, let's say there's a fair value gap here. Let's say we did have a fair value gap. Let's say it was like a 1 hour that we also came into here. It was like a 1 hour for value gap. We also swept that buy side liquidity. And we come into a 1 hour for value gap. Let's say this is like a big fair value gap, right? We're on the 1 hour chart. We're coming inside of it. And what do we see? We also see an SMT 5 minute or 1 minute, and then an inversion. And we have unfilled 5 to 15 minutes. A plus setup. That's beautiful. It's beautiful, especially if we're overextended. If we were overextended too, oh my gosh, you might hold that thing to the floor. I'm just kidding, but that's a quality setup. And ideally for the MEC model, you want to see us sponsored by a fair value gap, a mid time frame to high time frame, 15-minute, 30-minute, 1 hour, 4 hour. You want to see those fair value gaps that can sponsor the move to give us bigger reaction off this to push lower. And that's where you can get those unfilled 5 to 15 minutes. Price might want to just tap into those and continue higher. But that's how I'm looking at it. That's how I'm thinking about it. Overall, I mean, it's just not pattern trading over time. So this shit takes time. You gotta get used to shit. You gotta get market experience at the end of the day. Strategy alone, A/B trades. I talked about this in the video yesterday. Strategy will help you win more in these markets. Build consistency, right? And having a good estimated guess over these times, over all these probabilities, right? But you need to build market experience and discretion. And if you just trade to get on the market for a year, but you're not journaling anything, good luck, dude. Good luck. You need to journal. You need to back test. You need to forward test. I say forward testing. My buddy taught me it's even better. I don't back test as much as I should, but I forward test because I'm on the markets every morning and I'm experiencing these things. And even when I do see setups that I didn't even take, I go back and I journal them like it's a back test. And then just journaling that in my thing. So I'm like making sure that, you know, when I put this in here, I write down that I didn't take the trade to look back on it, but just understand like, hey, this was rated a 5. It must have been an A plus setup. And understanding what A plus setups look like compared to the setup yesterday that did play out, that I did take, which actually, I don't even think I brought this up. I went back to the setup yesterday and I rated it lower. Yesterday's setup, I gave it a lower rating. Want to know why? I'm going to go into that for a second. This is a really important part for me that I wanted to go in. It was trade one. This setup yesterday that I was rating a 3.5, I believe. I rated a 3.5 originally, which I thought I changed. I'm going to give it a 3. Not great setups. Should probably avoid these. Now, why? And I think I wrote it down. I believe I wrote it down actually. Table. Trade one. Wonder where I wrote it actually. It must have not logged into it or something. Either way, we can go over it. So coming into that trade from yesterday, where's my gallery? Bro, I'm tweaking. I just want to go into why I lowered the rating and why in the future I'm not taking that setup. So overall, mechanically, it looked good, right? And internally, it looked good. But Do I keep hitting trade 2? I'm going to tweak out, bro. There we go. But coming into it, we can look on to the 5 minute. So you can see my mouse. I wanted to see, so like I said, we were pushing sell side, sweeping sell side, right? We created big fair value gaps. And I was honestly wanting to see it deliver lower. Now we were accumulating here, and I wanted to see this 5 minute internal high get swept. That would have been my manipulation, and inside the 15 and 30 minute fair value gaps resting in between here, and then my inversion lower. Now we do come up, and we just respect these 15, 5, and 30 minute fair value gaps, and we get the inversion, and I get in for a continuation. Now the issue is with this is what we would call a failure swing high. From this high right here to this one, I wanted to see that get swept. It failed to sweep it out. Failure swing highs and failure swing lows, as when you put your stop losses at those, they are very likely, there's a very good chance that price will take it out. Price loves to target them because they're easy to target. These failure swing highs and failure swing lows, right? This is a failure swing high example. Price loves to take them out. It fucking loves it. In the same example, this is a failure swing low, right? It's just kind of a shit example. On the 5 minute, we have a low here and we have a low here on the candles. Failure swing low, fails to take it out, price sweeps it out, and then it goes higher, right? So it's just understanding things like that. Failure swing high, very likely for price to come and take that out. It was a bad idea to take that trade because of the stop loss. It was very low resistance stop loss. And our take profit. What do we see right here? This gave manipulation. This gave manipulation here. So what is that manipulation telling us? This take profit target, after it just manipulated, is now high resistance. It's high resistance. Price is not as likely to go and grab that. And now this is the issue in the debacle we get into. I don't know if I should say debacle. We have a failure swing high at our stop loss, which means that failure swing high is low resistance. Price really likes to target those and take it out. So this lowers our probability of winning because we have very easy draw on liquidity for price to take as our stop loss. And our take profit was high resistance, more high resistance, because it was the manipulation. It was a stop hunt here, kind of. And those are high resistance, right? High resistance. And so now our take profit has a lower probability of hitting because our take profit point is high resistance area, and our stop loss has a higher probability of getting hit because it's a low resistance area because of that swing high, failure swing high. That's mainly the reason. It wasn't that good. I mean, other than that, yes, we were respecting the 15 and 30 minute inversions, but also it was late in the day. We talked about this. It was like 9:50. It was late in the day, and we had chop. We had that big rip down at market open, and we had a bunch of chop. At that point, you should have just been off the market. It was lower probability, not only because it was later in the day, inversions are less likely to play out, and higher time frame context. The draw wasn't super clear. The higher time frame was a little choppy, and like I said, we failed to take out this 5 minute high, which would have been good manipulation, would have made the trade better. But we failed to take it out, making then this stop loss. If you were to get in this trade, your stop loss now a failure swing high, and which is not good. You don't want those, or failure swing lows. I think you understand that now. And then your take profit was something that manipulated not too long ago. High resistance. Yes, it played out now. It's still lower probability. So I'm not going to mark this as just because it played out, like, oh, that's an A+. That's the thing a lot of people need to do, is detach their ego from their trading. When they take wins thinking that they're on top of the world and they're right and they know everything, but then when they take losses, they punish themselves and think they're stupid and they don't know how to trade. They think they're not a good trader. That's not good, bro. You just get in, you put on your trade, and you observe, and you learn from it. In the same way as, like, I can't look at this and be like, oh, that played out, that's a beautiful trade. I fucking did that shit. I know what I'm doing. Understand that it's estimated probabilities. We're making estimated guesses off of probabilities. And this, now, knowing that this has a lower probability of winning, probably avoid these trades. Not that great. If we manipulate this high and we get that inversion, even with this being here, I mean, it's a little better. Maybe it's a 3.5 to a 4. But, like I said, on top of that, we had chop. It was just a day you probably should have avoided. And that's just something I want to get in. I really wanted you guys to understand that. And just for me to understand that, to go back on it, which I did. So understand that I did break rules on this trade, because price was choppy, so I should have gone off. and my entry was late in the day, so I should have been off due to it being lower probability. Not only that, but our target was a low that already swept the low, so it was high resistance liquidity. Our stop loss was failure swing high, so that's an easy target to take out, and price didn't take out that 5-minute internal high. So overall, the trade played out, but the next time, fade it if it has some of these qualities. And I went back and I changed it up. Overall, I got a couple other things I need to do tonight. So I'm gonna end this video. I'm gonna get this uploaded. I really hope you enjoyed this trade recap and hopefully you learned something from it. And yeah, have a wonderful day.